The credit card killer is here, and we will all be saved from this evil called credit through the BNPL model. Stick around to find out if Affirm's debut this week could be the next Tesla of payment solutions. Hey everyone, welcome back to the channel Invest for Tomorrow with K, and on this channel we talk about personal finance, investing, stocks and much more to achieve financial independence. So without further ado, let's dive in on today's video. Now more than ever we keep hearing this term, the so and so killer is here, and basically what they're implying is that there is a new entrant in the market who has the potential to disrupt the entire industry. When we talk about disruption, this is the image that comes into my mind. Now, I'm not comparing Affirm with Tesla. The only common thread between Affirm and Tesla is that both the founders, Max Levchin and Elon Musk, were part of PayPal. So this begs a question, does Affirm has the same potential to be the Tesla of payment solution? In this video, we will take a deep dive into understanding Affirm. We will look at their products and services, we'll understand their business model, we'll look at their financials so far, and then in the end we will see if this is a stock which you would want to invest or not, and my personal take. In simple terms, Affirm is a buy now pay later solution, aka BNPL. What it simply means that when a consumer is purchasing a product, they will have an option to go with a BNPL model where they can purchase the product on a loan which will be distributed among few months, and it could be as low as 0% APR. There is a growing trend of using this BNPL model lately because consumers, especially the millennials and Generation Z, are a little afraid of taking on debt without knowing how much it's going to cost them. As we know that the credit cards have a very high APR as much as 24%, which compounds as you pay through the installments. This often leads the consumer into a debt spiral if they miss a payment and ultimately leads them to bankruptcy. Hence, the founder Max Levchin is positioning Affirm as a disruptor with a moral perspective. Affirm in particular has gained steam in recent years by partnering with firms like Peloton, Casper, Expedia, and Shopify, some of the major brands out there. The vision of the company is that we are building a new bank, hopefully the largest bank in the world, by using technology from the ground up. Today, we help consumers buy a mattress and sets of dishes, tomorrow a used car, maybe a new car, and ultimately a house. Affirm's core market, the retail sales market, which totaled at $6.2 trillion in 2019 and has seen strong adoption in categories like apparel, beauty, furniture, and electronics, which accounts for about $500 billion of retail sales. They believe they can grow by serving new verticals, including food, auto parts, home improvements, and beyond. Now, strong growth is expected across geographies, particularly in North America. Coming back to Affirm, there are three products that they offer, and this is as per their S1 filing. Financing via third-party website, tools and analytics for the merchant, and a website and a mobile app. Ticker symbol AFRM opened on January 13 around noon at $92.93. The stock jumped 98% on its first day of trading, which is a very common theme we are seeing among the fintech stocks these days. The main sources of income for Affirm are merchant fee, lending fee, and buying and selling of loans. The total net revenue nearly doubled in 2020 from 2019. The primary reason for this was nearly doubling the merchant network revenue stream and improvement in the interest income. The operational losses decreased from $127,441 to $107,790. This also saw improvements in Affirm's net losses, which reduced in 2020. All these are very encouraging signs for the investors as well as the stakeholders in the company. In 2020, Affirm has most likely enjoyed a tailwind thanks to the COVID-19 pandemic, which boosted the e-commerce sector. There are few risks which we all should know about before we plan to invest in Affirm. And if you have already done so, it's also important that you know these risks as you move forward with your investment. Red flag number one. Affirm's 1/3 revenue is tied up with one merchant, and that is Peloton. I'm very bullish on Peloton. You can take a look at my video here. And now, in case Peloton has a bad quarter or a bad year in future, it will also impact a firm. So having both of them in the same portfolio is not a good investment decision. Red flag number 2. When we plan to invest in a company, we always want to see if they are the market leaders or not. So in the BNPL space, a firm is not the market leader. So if you look at this chart, a firm is actually losing the shares while the competitors like Klarna and Afterpay are gaining. Now that is not a very good sign for a firm. My concern is that the BNPL space is growing and then there are more larger competitors like PayPal are also joining the fray. Now if Square also in future joins the fray and then credit card companies may or may offer services like these, I do have my reservations on if a firm can continue this massive stock price growth in the future as well. Red flag number 3. It's related to the BNPL model itself. So as you can see from the chart here, a firm has been struggling with the customer complaints as of late. One of the main reasons for high rise of complaints is because just the way the BNPL model works. So in case you want to cancel the loan, you'll have to call the merchant, have them cancel the loan amount, return your product, and that takes a long time. So these are the 3 red flags which I feel you should be aware of and you should keep in mind as you think through your investment with a firm. The stock of course has ran up a lot, and will they be able to continue this growth? Time will tell. I personally do not like to invest in IPOs right at the debut time because as retail investors we end up paying a lot of premium. Well, that's it for this video, everyone. I really hope you all enjoyed today's content. Don't forget to hit that like button. If you would like to see more videos on personal finance, investing, stocks to achieve financial independence, be sure to subscribe. I'll see you next time, my investor family, but don't forget to invest for tomorrow.